Earnings season kicked off this week. We've seen movement in stocks. We've seen a bit of a sideways market. We're going to be looking at cryptocurrencies. We're going to be looking at the Federal Reserve. Basically everything what's been going on this week. So let's get straight into it. Hi everybody, welcome back to the Earn, Invest, Repeat show. And like I said, this is a weekly market update. I'm going to be trying to cover these every Sunday in case there are some things you might have missed. Maybe you're on holiday, maybe you just weren't on top of it. So I'm going to be covering everything in a nutshell, not condensing it too much for you. And of course, talking about what we have to expect in the week coming, which is, well, in a few hours. But of course, before we do get into it, please remember to pause this screen if you need to. This is the disclaimer. Of course, I am not a financial advisor. If you're seeking financial advice, please pay a professional to do so. Anything that I say in these videos are of my own personal thoughts, opinions, and experiences. So with that out of the way, let's get into it. Now, of course, camera quality is a little bit different than the last couple of videos. I am still messing around with things, so still bear with me. But let's get straight into what we're going to start off with, and let's kick it off with earnings season. All right, it is the season for earnings. A lot of companies are reporting their Q1 earnings, where they show how they've done during Q1 in terms of profit, revenue, and earnings overall. And we've gotten a lot of various companies, and so far the sentiment is actually worse than what we were thinking on expectations. It's not too much worse, but we are seeing that profit margins are getting squeezed because of, well, one, inflation is still high for companies in terms of input costs, which is making it hard for them to lower the prices. And the reason they want to lower prices is because, well, then they can make up on the other side with demand. Demand isn't there as well either, because consumers are still paying a lot of money on other goods and services. So they don't have a lot of discretionary income. And that seems to be continuing to happen as we continue to go through the deceleration of inflation. Especially towards recession, as profit gets lower and companies are not able to accelerate these profit margins as much as they were in 2020 and of course 2021. So let's just move straight on from that, because we are going to talk about certain stocks in a minute. Let's go into the LEI. The LEI is the leading economic index, and it is used globally to predict economic movements. Of course, there is a global index, as I just mentioned, but there is also a regional index and a country index. So here specifically, we are looking at the US LEI information in this case. And we got the data out for March. And you can actually see on the chart here, right, especially here where my mouse cursor is right now, which is indicating February, they looked like things were starting to moderate a little bit and maybe even improve based off the February numbers. But then we did see, of course, this decline happen here in March. And so that isn't really that unexpected. I mean, there's not too many people out there who aren't concerned or predicting a recession, as we know. Okay, that's the narrative. So it's not surprising that the LEI data is declining here. This is a composite of a number of different factors that they look at. And really, I think the only one that was up was the stock market. Okay, I believe we're going to go into that in not too long. All of the other factors were down, so you can see that we were below that recession warning level, okay, which is here, that red line, which means that they predict that when it gets below this level, we will see a recession sometime in the next 12 months. And so if you look at most of the economists right now, everyone's talking about recession, as we know. The yield curve is also telling us that there is a recession, and this data, of course, is pointing out as well. So it's basically just more confluence as to what we already know. Now, it's just a function of trying to figure out when that recession is going to be. And of course, the thing that everyone's trying to really get to grips with and figure out, and all the experts are out there pontificating on whether or not this is going to be basically a shallow recession or a really deep recession. Okay, how long is it going to last? How much it will continue to affect us? That's kind of like the big questions that everyone really wants to know the answers to right now. For me, I'm seeing that we're going to be hitting a deeper recession. But anyway, that's for another video, as always. So anyway, let's move on from there. Let's go to the calendar of last week. As you can see here, we had a fairly busy week, okay, in terms of data. We did have on Thursday, so let's go straight to Thursday here. We had the initial jobs claims report, and that came in above expectations at 245,000, where 240 was what was expected. And this is a weekly report, so we know that we get this report every week, and over the past 3 weeks we continue to see that initial jobless claims are increasing, which shows that the labor market is starting to show some weakness. We're still historically at very low levels of unemployment, but we don't want to see this continue into a trend, because as people lose their jobs, there's less money to be spent on goods and services, which will then make earnings even worse, which again then could also tip us into maybe not just a mild recession, but more of a moderate to a severe one. We also saw on Thursday existing home sales here, and the existing home sales continued to decline quite a lot, all right, from 4.5 mil to 4.4. And this has to do with the fact that there's not a lot of existing homes available out there right now. Okay, a lot of people in 2020, 2021, again, refinanced their mortgages to a low interest rate. Okay, gone are those days. And a lot of them are not going to be attracted at these new prices because, well, you know, interest rates are still high. And in that case, their payments would be higher. So they're not going to give up their current mortgages at around 2, 3, 4%, whatever they may be, to get something at around 5, 6, 6.5. So there is a limited supply of existing home sales. So a lot of people are flocking to the new home sales, which we're going to be seeing next week, which we're going to look at in a second. The rest of the week, you know, we did have a lot of, talks. You know, we had Lagarde speaking on the Monday. Yellen spoke as well, so on Thursday, as well as Weller. And of course, Friday, we saw PMI data. I'm not going to go into that. Let's move straight on. Now, in terms of the Federal Reserve, we did have a lot of Fed members speak throughout the week, and overall, the consensus continues to stay fairly hawkish. There's about, as we can see here, an 89%. It's gone up a little bit since when I made my notes here. But yeah, there's about an 89.1% chance that the market's predicting that we're going to be seeing a 25 basis point break hike on May the 3rd. Okay, so keep that date in mind. When the Federal Reserve, of course, meets again. Like I said, keep it in mind in the back of your head. Be wary when you are, and if you are trading that day especially. So let's have a look. You know, that's pretty much the news and data that came out in the week as a roundup. Let's go straight into seeing how the markets basically finished off this week, you know, in terms of performance anyway. It was a bit of a boring week, to put it lightly. Hold on, let's get my chart up. That'll be a bit helpful. There we go. And we'll start off with the Dow. The Dow was down at 0.2%, okay, so nothing to really shout home about. The S&P 500 was only down 0.1%, and the Nasdaq was down about 0.4% of the week. That was pretty much what we saw over the course of this week. So we didn't really even get a full basis point move in any of the major indexes. But oil was an interesting one. Why? Because, in fact, let me get a bigger time frame here. Remember my last video, which I'll link actually here on the top right corner of your screen, whichever way it is. I talked about this gap here. I said that we had this big gap here waiting to be filled. And as you can see, we've filled out, about 70% of it, okay, here in this move downward. And I believe it was around, I've got on my notes here, 6% down on the week. Okay, it's now at about, it's just under $78 per barrel. And that goes to say, you know, what I said on my last video. Moving on to the Treasury yields, the US 10-year yield here specifically, it increased to 3.576% here, as you can see. And a lot of that has to do again with the narrative that came out on the various Fed members and their speeches basically throughout the week. Gold, again, as you can see, I'm kind of really condensing this very, very much so. But anyway, gold was also down, as we can see here on the week. It was down about 1% this week, trading at 1982 an ounce. So that's where we are with pretty much, you know, the markets in particular here. But let's move over to the stocks, because this, you know, we want to see again, you know, how earnings really came out this week and how it affected the stocks as well as their performance. Tesla was the big one on everyone's radar really this week in terms of news. They reported their earnings and it was disappointing to the investors. They were down around 10.8% on the week to $165 per share, as we can see here on the screen. This isn't too surprising given the fact that they had 2 price cuts alone this month in their car sales, and they've had ones earlier this year as well. So it's not really super surprising that you're seeing that just from a pure revenue standpoint. And then, of course, demand, that they continue to have some challenges with supply. And then if you think about the overall economy and economic activity, well, why are they lowering the price of their cars? Well, for one, we know that there's more competition. Okay, just look at all the electric vehicles that are being produced in China. So basically, it shouldn't come as a huge surprise anyway. Another company we also saw reported this week was, of course, Netflix. That also disappointed investors. They were down about 3.2% on the week, down to just under $328 per share. Amazon, I believe, are reporting this coming week, and investors actually gave that stock a bid. It was up about 4.3% on the week to $107 per share. So with that out of the way, let's just very quickly look at what have we got coming up this week in terms of news. as we can see here. It's a fairly thin week. Okay, it's not a massive news week this week. So if you're trading, feel free to trade. You're going to have plenty of opportunities to trade away from the news. Of course, we do have on Tuesday the consumer confidence report, as well as the new home sales. Going back to what we were talking about, the existing home sales earlier. Thursday, of course, we've got the advanced GDP. All right, quarter on quarter. So that's going to be one to look out for, as well as the, of course, unemployment claims. And on Friday, we've got core PCE price index and the Chicago PMI and the revised University of Michigan consumer sentiment report. So, Friday, okay, a bit heavier, but pretty much thin for news and data this week, when it comes to the market data anyway. So as always, if you are trading around news and data releases, be aware of the volatility that can happen. Finally, let's move over to the cryptocurrency segment. Before we look at the markets, I did find this fairly amusing. A Trezor stick, all right, if you don't know what a hardware wallet is, we'll talk about that in a second, but a Trezor stick was found in Terra founder Do Kwon during a thorough body inspection. All right, this made me chuckle a little bit. How he got it in there is well, I'll leave that to your own imaginations, but I don't even know if this is even verified or if this is just Twitter, the usual Twitter shit. But anyway, it just made me laugh as it was. But you know what? Let's go straight to the price action, because I think that's going to give us a better picture as to what's happening in the market. Let's go to the hourly. And of course, if you are invested in crypto or you're just watching the markets, Bitcoin has had a drop. Okay, and remember before we were at here, I think on the last week market update, somewhere here, and I was saying that I was expecting a drop to happen here. No one's got a crystal ball, and I'm never gonna predict things for you. Okay, that's not my job. But it was a very clear pattern here that we saw. Call it head and shoulders pattern, call it whatever. I use my own indicators for that. A lot of liquidity ready for the taking down here. Okay, so that's interesting to note. But yeah, in any case, we're under 28k. We are in relative zone of interest, not too much. We are going to want to see how this plays out. Seeing this week, of course, going to be variant on very different factors. See how the dollar evolves as well. But yeah, that's Bitcoin. Very briefly, let's have a look at Ethereum. Of course, we also saw that we had the Ethereum upgrade as well. But yeah, Ethereum sitting at just over 1850 at the moment. Again, on the daily, we are at the 50 EMA here. So a bit of a zone of interest here. Are we going to come back down to this area? Let's see how the week is going to play out. But anyway, the point is finally Bitcoin did stop its rise, and it's kind of, continually built bull run. That's, everyone's talking about bull run, but crypto is dependent on so many more things now than it was before. And it struggled to sustain what it had done over the last couple of weeks. It was down about 9.8% on the week to, like we said, just over 27,500, and that's obviously because risk appetite seems to be diminishing somewhat, as we also see reflected in gold. Now we also have the volatility index. I didn't actually bring that up. Hold on, let me change screens again. So yeah, the volatility index, the VIX, it is coming down to, well, not all-time lows, but it's coming very close. It's coming very low anyway, which means there is a lot of fear in the market. Okay, I'm not going to talk about the VIX. Maybe I might do a dedicated video on things like that. But yeah, there is a lot of fear in the market, so we're not seeing a lot of big moves right now. And it's going to be interesting to see if there's any big volatility event happening, or if we're going to continue to stay boring like we pretty much saw in the markets over the week, like we've been seeing over the last couple of weeks. So anyway, I think I'm going to round it up there. I don't want this to be super long. This is just a weekly market cap recap. Not market cap, market recap. Interesting week. Interesting to see how things developed over the course of the week, and it's going to be interesting to see how next week goes. Again, like I said, not a lot of news plays, not a lot of data-driven news plays anyway being put out next week. So free reign of the markets. If you are trading, of course, trade safe. For the rest of it, I haven't. Just looking through my notes, don't think I've missed out anything. I have got an interesting video coming to you tomorrow. Actually, I'll finish off this video like this because I keep forgetting to. Join my Twitter. Okay, I've got a Twitter. It is all on my YouTube banner, all right, on my homepage. But of course, you can click the link down in the description that will take you to. This is my link page. Basically, if you go all the way down to the bottom, you see all my socials down here. Twitter, TikTok. Yeah, I'm pissing about with that. I have got an Amazon shop there as well, so if you are looking for any trading, investing kind of needs and materials, it'll be in there, and of course my YouTube channel, etc. I do have a Telegram channel as well. I'm not really focusing too much on that. It's really just announcing the latest videos that are coming out, but I do want to start striking up more conversations. I want to hear what you guys are watching out for, what you looking out for. But yeah, you know, go through my link page as well, see if there's anything here of interest. I will be talking about prop firms probably in tomorrow's video. If not tomorrow, certainly Tuesday. There is a new funded trading program that I am using, that I'm going to be going through a whole start to finish. Basically how you can trade with a large amount of capital, right? How you can trade with about 100 grand for the cost of around $300-$500. Something that's really interesting to do and to know, and only something to really do if you are proficient in trading. But I'll discuss all of that in that video there. But on that note, guys, I've been showing you lots of stuff on my screen and you haven't been seeing it. You've just been seeing me. Look at that screen there, thinking that I was showing you. Anyway, there you go. There's a hiccup for you. Boomer moment, as they say. So you know the one, if you are watching that. But anyway, all right. Sod it. I'm not going to re-edit it in. It is what it is. Hope you've enjoyed this video, guys. Hope you have a cracking week ahead. Hope you had a great weekend, of course. And also, before you do go, if you did stick it out to the end of this video, don't forget to like, subscribe, do all that kind of jazz, hit the notification bell, and I'll catch you guys on the next one.